Hey, good afternoon. Mep here, Mep Investments. So I wanted to do a video to start the year to help out my fellow subscribers and future subscribers um, on options trading and how to uh, do it for a living or as a passive income or part time. Um, Here are some rules that I wrote down, and then I'll go through them and. And as the year progresses, I'll do more videos on them and examples on how to be mechanical and have a systematic approach uh, every day of the year. When you wake up, you have an approach to how to trade and know what you're doing. So how to trade options. Here's some of the rules that I live by. You want to pick liquid products. So one of the first things I do once the market settles down at about 10:30, is I come to bar chart. I love this website. I honestly would not be able to live without this website. I would actually, if they made me pay a subscription, I would pay for it. Um, I would come to options and I go to most active options, and this applies to rule number one. So what do I mean by liquid? So Apple is the highly traded number one option with over 1 million contracts trading. Tesla number two, just about shy of a million. AMD at 500,000. Nvidia uh, at 450, and so on. So I mechanically go down these stocks and based on option volume, and that's when I talk about liquidity. You don't want to be trading options that have 100 contracts traded or 300. And I'm going to add to this liquidity part, which I didn't write in my notes. Um, Make sure that the bid ask on the options are pretty tight. You know, you want to try, in a perfect world, there will be a penny wide, but if you can get 2 or 3 penny wide, um, that's better, or 5 cents, max, more or less. And here, let me illustrate what I mean by that. So if we go into an option chain, because you may not understand what I'm talking about when I say bid ask, let's go to, for example, let's just go to FCX, a copper plate. You go to the options, right? You see how let's go to the monthly chain. Let's go out 48 days, let's say. And the stock is trading at $42 almost. You see how their bid is 241 and the ask is 251? There's a 10-cent difference there. So that's what I mean when I'm talking about bid ask. You don't want to have a bid of $1 and an ask of 250. That's just too wide. It's very hard to get in and out of those option trades. So that's another rule adding to liquidity. But if they're liquid, that means that the bid ask spread for the most part is gonna be within your threshold. The second rule is you want to stay small. So when when I talk about these option contracts, one option contract represents 100 shares of stock. So that's why you want to stay small. Know your product. Um, if you want to buy 100 shares of FCX, for example, that's $4,100. If you want to buy 100 shares of Apple, that's $17,000 plus. So you don't want to be trading 10 contracts or 5 contracts. One contract is sufficient for a small account. So that's what I mean by staying small. Okay? One contract is sufficient. One contract, one spread. Delta neutral. So delta. So let me back up. So when you're learning options, there are 4 elements. Let me add another one here. Know your Greeks, which are delta. Well, I put 12 there, but whatever. Delta, theta, gamma, and vega. Gamma and Vega make up more like the volatility on the options. I focus more on delta and theta. But what is delta? So if you buy 100 shares of Apple, that is 100 deltas. That's what that means. So if you have 10 deltas, you basically have a tenth of an Apple share. I hope that kind of opens your horizon and you understand a little bit more what delta is. 100 shares of delta is 100 deltas is 100 shares of stock. If you have one delta, you have one Apple share. If you have 10 deltas via an option spread here that I'll get into now when I talk about strategies, is you have a tenth of the of the stock. Now you can do negative deltas or positive deltas. Negative meaning you think it's going to go down. Positive that you think is going to go up. When I say delta neutral is you're looking for strategies that don't have a bias, but you're taking advantage of the volatility. And actually, I left out probably the second most important one here, which is IV rank. And what does IV rank do? It lets you know whether uh, to buy the options or to sell the options. So um, here in uh, in the TD Ameritrade mobile app, you can see here that Apple, for example, has an IV rank of 24%. That is low. We are looking for stuff, for example, and I know off the top of my head because I look at all these things all day. For example, FUTU, a Chinese play, has an IV rank of 50. So what happens when IV rank is high? Usually price movements get overstated. This is your edge. When IV rank is high, it means that the options are expensive, that the premiums are expensive, and you want to take advantage of that and sell those options via defined risk strategies, which I'll get into. So when the options decline, the volatility declines, your options uh, are making money, and vice versa. You can even be wrong and get volatility right, and be wrong, let's say, on direction of a stock, and still make out because a lot of times volatility gets overstated, and that's your edge. Okay. For example, Apple doesn't have a high volatility. So here the strategy would maybe be a broken wing butterfly or maybe even a calendar spread. So those are the things that you need to learn to become an effective options trader on a daily basis. Um, and then we want to be number five, you want to have theta work for you. And that's why you mainly want to be an options seller because options are decaying assets. You really don't want to buy options. And if you do, you want to make sure they're very cheap and that at least you're selling something against what you bought to lower your cost basis. Very important, okay? Options are decaying assets, and you want to really stick with becoming a net seller of options. So that's why I say theta working for you. There are more rules, but I'm just giving you the basics here. Um, Beta weight. What is beta weight? So beta weight, and I wouldn't be able to do it here. I would have to do it on the TOS platform, the Thinker or Swim on my laptop. Maybe I'll do another video within the year here coming up as I do the videos. Beta weight basically is you're grabbing your whole portfolio, all your trades, all your occurrences, and you are weigh, weighing your portfolio versus the S&P 500, which is the base metric that everyone uses, and it'll tell you how many deltas, how many shares are you long or short, meaning assuming that the market's going to go down or up in your portfolio, it'll tell you how much exposure you have to the overall market. That's why the beauty is trying to be neutral, that markets are random. You really don't want to try and pick direction or tops or bottoms. Obviously, you if you're engaged, you kind of get a feel for it when things are overextended or oversold. But that's the importance of evaluating your portfolio. Let me make sure my AirPods are connected. Yeah, sorry about that. I think they are. So, very important, beta weighting. Define risk strategies. So, here I'll go to Tasty Works, where you can see I like this app because it gives you a good illustration here. These are all the different strategies that you can use. That's why I love options trading, because when you're gonna buy a stock, you just buy or sell. But when you're looking at options, don't look at yourself as just an options trader. You're actually doing quantitative analysis. You're a derivatives trader. You're a quantitative analysis. You're analyzing and putting strategies together. That's the beauty of this. You can make up so many things. You can get creative with these spreads. It's such a beautiful thing. I love it. So passionate about this. So the strategies that you can select for everything is composed of a vertical, which is your basic. You're buying one and selling one. So here is the first strategy: vertical, then strangle, then straddle, then iron condor, covered call, covered put, butterfly, J lizard, calendar, ratio, and those are the different strategies that are out there. There's also a zebra that's out there, which is like a stock replacement. The poor man's covered call. So these are just terminologies. Don't get spooked, but learn them. And I've always mentioned to you, I'm doing these videos because I love this and I'm very passionate about it. And I don't know it all. I'm not, I do well for myself, but I highly recommend, if you like this stuff and you want to grow your income passively, or be engaged in the markets daily and become a successful trader, and you can even do this full time. Highly recommend checking out these guys, Tasty Trade. They have great content. They have great research team. They put stuff together every day and make it a priority in your new year to learn this stuff. The education is free. You don't have to pay anybody for this. And also TD Ameritrade has here on the More tab, you got Trader TV right here, and they have
that you're
all
chipping
kinds of
away
good
at
stuff.
that net debit. And when you chip away at that net debit,
You
Tom,
can see
you also chip
that they're
away at
talking
the
about
break even on
trades
this
and
trade.
analyzing trades
Right,
here.
and
So
as
take
our viewers,
advantage of that. It's free. Okay. Also, learn the future markets, which I talk a lot about, and I just did a video on how the futures did in 2021. Here are all the future products. Get engaged with them. These are more 50-50 probability trades. I like option trading better because you can formulate trades with probabilities of 65% to 75%, which give you a better odds. Basically, you're the casino. Futures are 50-50, but they're good ways to know how to hedge your portfolio, or maybe get exposure to the markets if you want to be long the market, etc. So learn the future products and the different sizes that they have and capital that they require. And that ties into number 9, return on capital efficiency. So in this age that that Apple's at $180 and Amazon's at 3,500, let's say, these are expensive stocks for the average Joe. So, if you're gonna buy 100 shares of Apple, that's $18,000. Now, is that an efficient way to use your capital instead of using a $500 wide spread or $1,000 wide spread? So, focus on your return of capital. If you're gonna tie up $500 and you can make $50 on that $500, that's a 10% return. If you can make $100, that's a 20% return. And that's the way you got to look at your capital. Another thing is, for you to be successful, you have to have a lot of trades on the board. You can't just put a couple trades, two or three, and say, "Oh, these two or trades didn't work out. This doesn't work." For the probabilities to work out as a casino, you have to have many occurrences trades on. The more you can put on, the better. Being defined and at probabilities of 65 to 75%, and knowing how to defend these trades if things go wrong is a beauty. It puts you at a higher edge than everybody out there, and you're basically becoming the casino. So work on having a lot of trades. If you have a little trades on, your probabilities of them playing out the way you want them to might not work. They may and they may not. But if you have more currencies, you have a better chance. I already talked about knowing your Greeks, and as an option trader, you have to be a contrarian. Um, if Apple's up huge, you want to sell stuff against it. If something's down huge, you want to be against the herd, in other words, and bet that it might go back up. Because usually the tendency is that this is all statistics, and when things get oversold or overbought, they usually have a tendency to revert back to the mean, to the average. So, and that's where we come in and take advantage and make our money. So just this is just some little rules on options trading, and like I said, I'm not an expert. I'm not a financial advisor. I am a successful options trader, and I do make money year in and year out. And it is something that's beautiful that you can apply to your side hustle, or if you want to do it full time, etc. Like I said, I recommend, and where I learned most of my stuff was over here at Tasty Trade. They have a lot of research and contact. Tony and Tom are great. They're very funny, and they have great information here, and they make it very entertaining. And also, you have Trader TV. I watch it every day, and I try and pick up not only ideas, but trades and the know how, so I can be successful, mechanical, and systematic on a daily basis. So please share the video, like it, and I plan on doing more videos here. I'm starting the year off with 3 videos, and I want to grow my YouTube channel, because I like to help others out there that are looking for this content and information. Anyways, have a happy new year, and I'll see you in the next video. Bye bye.